Welcome. You're joining us for a focused exploration, really tailored just for you today.
Yeah, we're diving deep.
We are. Today's topic is something that affects, well, pretty much everyone, the U.S. tax system and actually preparing your taxes.
Mhm.
You shared some great excerpts from Taxes for Dummies, and we're going to pull out the key stuff, make sense of it all.
Exactly. Think of it as your shortcut to feeling a bit more clued in about taxes.
Right. Because the material you sent covers a lot, doesn't it?
Yeah.
Basics, getting organized.
Oh, yeah.
Yeah.
Basics, organization, even what to do if things go sideways. Our mission here is just to extract those nuggets, give you that clearer picture of your obligations, and, importantly, your options.
Okay, let's jump right in. The book starts with something pretty relatable, I thought,
We could,
that most people actually do their own taxes, especially if their finances are, pretty much the same year after year.
that makes sense. It's a common starting point.
Yeah, we manage our money all the time, so taxes shouldn't feel totally impossible, right?
That's the idea. And, the IRS itself, irs.gov,
Yeah.
all their forms, publications, they are the official source.
The official source, yeah.
But you have to remember what they're there for. They state the rules, the facts, the what is.
They tell you the law, but maybe not the easiest path or where you could save.
Precisely.
And that's where the book you shared, Taxes for Dummies, really shines, according to the text. It highlights these kinds of guides.
Right, the privately published ones.
Yeah. They explain things in plain English, and this is key, point out ways you might actually reduce your tax bill.
It's like getting a translation of the tax code plus some strategy tips.
Exactly. It puts you more in control, doesn't it?
It really does. And the cost of a book, or maybe a good online resource, it's usually way less than hiring someone every single year.
Especially if your situation isn't super complicated.
Right.
And sticking with the DIY idea, the book talks about tax software.
Ah, yes, the software route.
It mentions how easy it can be, the help features, those little reminders about deductions you might forget.
Which are definitely helpful tools for a lot of people. Big BUT, though.
Uh-oh, what's the but?
Well, the software only knows what you tell it. Garbage in, garbage out, as they say.
Good point. Accuracy still depends on you.
Totally. And also, check if you qualify for IRS Free File before you shell out money for software. You might get it done for free.
That's a really smart tip. The book even names a specific site, CCH's Complete Tax, as a paid but reasonably priced option for electronic filing.
So yeah, different levels of DIY help available.
But what if things get more complex, or you just want that professional reassurance?
Then you look at getting help. The book lays out the main players: tax preparers, enrolled agents, EAs and CPAs, certified public accountants.
Okay, tell me more about EAs. They sounded interesting. The book says they specialize in tax.
Exactly. Tax is their whole focus. Preparation, advice, representing you to the IRS if needed.
And their fees are often between a general preparer and a CPA.
Often, yes. And they have ongoing education requirements, needing to renew their license every 3 years, so they have to stay current.
That suggests a real commitment.
It does. For many people, that specific tax expertise might be just right. A CPA often handles broader accounting, like audits or financial statements, which might be overkill and more expensive for a simpler return.
So it's not just the letters after the name.
Not at all. The book stresses finding the right individual expertise for your situation. The credential is one thing, but their actual knowledge matters most.
Makes sense. Find the right fit.
Absolutely. And whether you DIY or get help, there's one thing the book hammers home as non-negotiable.
Let me guess. Organization.
You got it. Getting and staying meticulously organized with your records.
Yes. This part really stood out. If you disagree with the IRS, the burden of proof is on you.
100%.
Yeah.
You need credible evidence, not just, oh, I think I spent about.
Right. They need proof.
Which is why good records aren't just nice to have, they're essential financial protection. The booklet's examples.
Like W-2s, 1099s.
Yep, income statements, expense statements, bills, receipts. And interestingly, it notes canceled checks alone might not cut it anymore.
Wow, okay. So you need the actual receipt or bill, too.
Often, yes. It's like building your case proactively.
And the reward for all this effort?
Avoiding extra taxes, interest, penalties from audits. Peace of mind, basically.
Yeah.
The book even points to later chapters on fighting audits, which, let's face it, nobody wants to deal with.
Definitely not.
And it even touches on what to do if records are lost, or if you inherit property or get it as a gift. How do you figure out the original cost, the basis?
Oh, right. How do you do that?
It mentions things like using the fair market value at the time you received it, maybe even using the consumer price index to adjust historical costs. practical stuff for tricky situations.
Okay, shifting slightly. The book gets into filing statuses. This seems pretty basic but important.
Oh, incredibly important. It's not just checking a box. Your filing status affects your standard deduction, tax rates, eligibility for credits. It's fundamental.
So what are the options? There's single...
Right, for most unmarried folks. And an important point the book makes. The IRS doesn't recognize cohabiting couples as married for federal taxes, even if state law does.
Interesting distinction. Then married filing jointly.
Probably the most common for married couples. You can usually file jointly even if you weren't living together right at year end. There's even a special rule mentioned for non-resident or dual status aliens.
Okay. And married filing separately, why would someone do that?
It often means more federal tax overall, but the book notes it can sometimes save on state taxes. Big caution, though. Community property states have very specific, often complicated rules for this.
Right, gotta watch out for state specifics.
Yep.
Then the head of household.
Which has its own tests, needing a qualifying child, paying over half the home costs, things like that.
And finally, qualifying widow.
Correct. For a couple of years after a spouse's death, if certain conditions are met, choosing the right status is definitely step one in getting the best tax outcome.
It seems like it really pays to understand the differences.
Absolutely.
Yeah.
Then the book talks about exemptions, personal exemptions. These directly reduce your taxable income.
Like a set amount per person.
Exactly. Back in 2008, the year referenced, it was $3,500 for you, another $3,500 for your spouse if filing jointly, or under specific conditions if they passed away during the year.
And then there are exemptions for dependents. This sounds like an area with a lot of rules.
Oh, definitely, especially around who counts as a qualifying child. The book lays out 5 key tests.
5 tests. Okay, what are they?
There's the relationship test: child, sibling, foster child, etc. The age test, generally under 19 or under 24 if a student, or any age if permanently disabled.
Okay, age and relationship.
What else? Residency. They have to live with you more than half the year. Gross income, their income generally has to be less than the exemption amount. And support you have to provide more than half their support.
Wow, that's quite a checklist.
It is. And there are special rules for kids of divorced parents, which often causes confusion.
I can imagine. The book also flips it around. What if someone else can claim you as a dependent?
Right, that affects your own standard deduction. It points to another chapter for the details on that. It's all connected.
It really is. Okay, let's tackle the big one. Form 1040. It looks intimidating.
It can be. Though the book does mention the simpler forms, 1040EZ and 1040A, for simpler situations. But yeah, 1040 is the main form for most.
Feels like learning a code sometimes. Where does the book start us off?
It points out key lines for income first. Lines 6A to 6PIN are for those exemptions we just talked about.
Got it.
Line 7 is for foreign earned income, usually calculated on a separate form, 2555 or 2555EZ.
Okay.
Line 8A, taxable interest income. This is interesting. The book warns about potential errors on the 1099 INT forms you get from banks.
You should double check those.
Definitely. And file an amended return if you find a mistake later. It also discusses different bonds, EE, IH, HH bonds, T-bills, and when that interest is actually taxable. It's not always straightforward.
Timing matters, huh?
It does. Then lines 9A and 9B are for dividends, reported on Form 1099 DIV. All this income adds up to your total income on line 10.
Okay, total income.
And line 13 specifically flags capital gain distributions, which get detailed on Schedule D.
Right, investments.
All these numbers flow down to a critical figure. Adjusted gross income, AGI, that's on line 21 and carries to line 38.
And AGI is important because...
Because so many other things, deductions, credits, are based on it or limited by it. It's a key benchmark.
Okay, so getting AGI right is crucial. Then the book dives into deductions that reduce AGI.
Exactly. These are often called above-the-line deductions.
Right.
This is where you can really start chipping away at your taxable income.
Like what? What kind of things?
Well, there are deductions for educator expenses, certain business expenses for reservists, artists, some government officials, contributions to a health savings account, an HSA,
Okay.
moving expenses, but those have strict tests, like the 50-mile rule and how long you work at the new job.
Right, specific rules there.
If you're self-employed, you can deduct half of your self-employment taxes. Contributions to retirement plans like KEO, SEP, or simple plans, self-employed health insurance premiums.
Wow, quite a list already.
It keeps going. Penalties on early withdrawal of savings. Alimony you paid, though. There are rules and potential recapture issues there.
Recapture. Sounds complicated.
It can be. Then IRA deductions, lines 32. There are contribution limits, $5,000 or $6,000 if you're 50 plus back then, and income limits might reduce or eliminate the deduction.
So it depends on your income and if you have a work retirement plan.
Correct. Student loan interest deduction, up to $2,500 on line 33. Tuition and fees deduction, even a domestic production activities deduction, which is a bit more niche.
That's a lot of potential deductions just to get to AGI.
It really highlights why understanding these is so important for lowering your taxable income right from the start.
Okay, so after all that, you have your AGI. What's the next big step?
The next big decision is standard deduction or itemized deduction.
Ah, the classic choice.
Right. The standard deduction is a set amount based on your filing status, age, blindness. You find around lines 23 and 24, applied on line 40.
Higher if you're over 65 or blind, right?
Yes. But there's a catch. If you're married filing separately and your spouse itemizes, you generally can't take the standard deduction.
Oh, interesting rule.
And another special rule, if someone can claim you as a dependent deduction, your standard deduction might be limited.
So you compare that standard amount to
your potential itemized deductions, which you list on Schedule A. Things like certain medical expenses above a threshold, state and local taxes, though those are capped now, home mortgage interest, charitable donations.
So you add all those up?
You add them up, and if the total is more than your standard deduction, you itemize. If not, you take the standard.
Definitely sounds like you should check which is better each year.
Absolutely worth doing the math. Then the book moves on to tax credits.
And credits are even better than deductions.
Right. That's the key takeaway. Credits reduce your tax bill dollar for dollar. Deductions just reduce the income your tax is figured on.
Big difference. What credits does the book mention?
The child tax credit, which has income limits. The additional child tax credit, if you couldn't get the full amount of the first one. The first-time homebuyer credit, though that one's rules change a lot.
Okay. What else?
The earned income credit, or EIC. That's a major one for lower to moderate income workers, especially with kids. It has its own income limits and rules.
Right. EIC is really important.
The book notes you could elect to include non-taxable combat pay for EIC calculations, which is interesting. It also warns about penalties for fraudulent EIC claims.
Good to know. Any others?
Yes, the retirement savings contributions, credit, the saver's credit for lower income folks saving for retirement, the adoption credit, credit for prior year minimum tax, alternative motor vehicle credit, foreign tax credit.
Wow, a whole range of credits.
It is. And understanding which ones you might qualify for can make a huge difference to your bottom line.
Definitely. Okay, we're getting near the end of the form now.
We are. The book points out the lines for direct deposit of your refund. Lines 45BD. Line 47 is the big one, Taxio.
Or hopefully a refund you're getting.
Hopefully. Line 48 is where penalties for underpaying estimated tax show up. Line 60 is for household employment taxes, the nanny tax.
Okay.
Line 65 is if you had too much Social Security tax withheld. Line 67 is for payments made with an extension. Lines 68 tax are for claiming credits from other specific forms.
Got it. Almost there.
Almost. Line 41 calculates your taxable income, that's your AGI, minus either your standard or itemized deductions. And line 80 is where you sign.
Phew, that's a journey through the 1040. But what if mistakes happen, either by you or the IRS?
Good question. The book has chapters for that. Chapter 17 tackles IRS mistakes.
Like if they send you a bill you don't think you owe?
Exactly. Or generic notices, or if they apply your payment wrong. The advice is basically communicate quickly, clearly, and keep copies of everything.
Okay, that makes sense. And if we mess up, if I realize I made a mistake on my return?
That's Chapter 18. You can fix your own mistakes by filing an amended return, Form 1040X.
So there's a way back?
Yes. The chapter also covers time limits, the statute of limitations for fixing errors or claiming refunds, and options if you owe tax you can't pay immediately.
Like what?
Installment agreements, using Form 9465, and offer and compromise, Form 656, if you truly can't pay the full amount, requesting penalty abatement if you had a good reason for being late, and innocent spouse relief.
Innocent spouse relief?
Yeah, for situations where, say, your spouse hid income or claim bogus deductions without your knowledge, there are specific forms and rules for that.
It's good to know these options exist, even if you hope never to need them.
Definitely reassuring. Finally, the book wraps up by touching on year-round tax planning.
Not just thinking about taxes in April.
Exactly. It mentions estimated taxes, Form 1040-ES, if you have income without withholding, like from self-employment or investments.
So paying in quarterly.
Typically, yes. And just generally thinking about the tax impact of financial decisions throughout the year. Retirement accounts, investments, buying a house.
It points to other chapters for those specifics.
It does. Chapters on retirement, investments, home ownership, kids and taxes, estate planning, even working effectively with tax advisors.
So the big picture is, be mindful of taxes all year, not just at filing time.
Precisely. That proactive approach can save money and prevent headaches later on.
Okay, so wrapping up this deep dive, it feels like the core message is understand the forms, know your deductions and credits, but above all,
Keep good records. That underpins everything.
absolutely. And based on these Taxes for Dummies excerpts, while it's complex, resources are out there.
They are. Guides like this one, software, professional help. You don't have to navigate it totally alone. Hopefully this overview has distilled the essentials from your sources for you.
It really has. It feels much less like a maze now, more like a path with signposts. Breaking it down helps cut through the complexity.
Which brings us to a final thought, maybe something to chew on.
Tax laws aren't static. They change. So staying informed, maybe doing a quick check-in each year, or having an expert you trust. It might be necessary to really optimize things long-term. Maybe future deep dives could even tackle specific areas, like maximizing certain deductions or tax-smart investing based on current rules.